This is not a pattern just to Palantir. This is a pattern that we see all the time, and it's just a recurring thing.
Help us understand, like, what are we looking at in terms of when you're looking at the PLTR in the big picture, like what are you thinking and how are you seeing it when it comes to structure for your point of view?
If you get a situation where a lot of people are riding the long train and they haven't really been shaken out, they haven't been tested, or like you have everyone on there. And so the first sign that like the boat is rocking the other way is
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today is going to be a fantastic day because we have our laptops out, which means we're diving deep into screen sharing and strategy and big picture. I have my man Chris here from Investors Underground, who will be talking about structures and how we're going to be showing you how structure and how you view structure can actually help you execute a trade plan. So Chris, take it away, brother.
Yeah, absolutely. So I talk a lot about like with trading, understanding not just the technicals, not just the two-dimensional, but also understanding the three-dimensional part that goes into it. So not just supply and demand, but where's that supply coming from? Where's that demand coming from? And then kind of piecing everything together to say, how could you actually prepare for a setup? And then how can you execute on that when the setup presents itself? So something that I wanted to, touch on was this Palantir trade, which it was funny because, before we were recording, like this morning, we had this on watch. Last Sunday, I had this on Sunday scan. And so this is just a good example where this just happened today, a half hour ago or an hour ago. And so it's a perfect example to talk about it.
Absolutely. So go for it and help us understand, like, what are we looking at in terms of when you're looking at the PLTR in the big picture, like what are you thinking and how are you seeing it when it comes to structure for your point of view?
Absolutely. So this is an example of like a mean reversion trade. And so, a lot of times stocks are in trends for long periods of time, and then they'll get to a point where they're either overextended or something impacts them so that they're ripe or they're ready for a mean reversion trade. And if you can kind of recognize those signals earlier on, when it actually comes around, you can be prepared for it. So what happened with Palantir today is that it finally had a big mean reversion trade to the downside. It fell, I believe, about 10%. And so I'm just going to talk through a little bit about how this chart set up, how the structure set up, and then how someone could have potentially profited on this if they traded it.
And be prepared for the next one, really.
Yeah, cool. Yeah, absolutely. Because this is not a pattern just to Palantir. This is a pattern that we see all the time, and it's just a recurring thing. So I'll walk through what I saw. So with Palantir, a very popular stock, very popular with options and with equity. It's had a lot of catalysts, and like we've talked about in other interviews, if you have earnings per share increasing, if you have revenue increasing, if you're dialed into an in-play theme, then those are stocks that can really go. So we've talked about in other interviews, when you have a stock that has rising earnings per share, rising revenue, it's in a hot theme, it's in play, and it's trending for a long period of time. You can see that Palantir has been in play for a while, and it finally started to speed up. And what that means is that while it used to go from 85 to 87 to 89, now it's going from 105 to 115 to 120. And so it was finally running up into like that 125 area. And the timing of this month in particular makes sense from an options perspective. And I'll just touch on that very briefly. And you don't have to be an options trader to understand or to really even think about this, but it's something to at least be aware of. And so there's something called the monthly options expiration cycle. And that's basically where the third Friday of every month is kind of like the big, most liquid, most important date in options. And the reason for that is because back in the day, there used to only be monthly options. And so everyone would pile into that specific expiration. So what happens a lot with especially large trending, large cap stocks is that you'll have options activity going along with the trend, and they'll all kind of congregate to that third Friday. And so that's known as like MOPX week. And so a lot of times for overextended names or trends that have been running, I'll look for that MOPX week for mean reversion trades. And so I'll look at large cap names that are options driven, names that are overextended, and basically things that are ripe for a mean reversion back down. And so as we approach the later part of that week, it's the right timing for this. And we have the setup going into it. So an overextended name, and then you're basically looking at key levels, you're marking those along the way, and then you're waiting for some kind of catalyst to set off that structure.
I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers. And Cobra Trading was the only broker awarded in 2 categories. One of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show.
Okay.
In this case, the catalyst is the options? Is it the options week?
Not always. So there was a catalyst on Palantir where Trump came out and said that they were going to reduce some of the defense spending. And because Palantir benefits from defense spending, that was a hit to them. So you have a catalyst, but it's not just a catalyst on its own. It's a catalyst combined with a structure that was ripe for a mean reversion trade. And so when you're aware of the setup and you're watching something, a lot of times it's just waiting for that one moment. It's like an avalanche. It's like an avalanche doesn't trigger because, someone threw a stone at it. It's built up. It's ready to go. Something just needs to set it off. And so that's kind of what happens with these big mean reversion trades. So just from the option side, everyone's piling into calls, and then people have to hedge those calls by buying stock along the way. And so you basically just have everyone on one side of the boat. Everyone is long. Everyone's waiting for this thing to go parabolic. And then something goes the other way, and all that positioning unwinds, especially with very clean trends that don't have a huge amount of dips along the way. People don't get shaken out. So you have all types of buyers in the tape. You have investors, you have traders, and you have people who are price sensitive, people who are not price sensitive. And if you get a situation where a lot of people are riding the long train and they haven't really been shaken out, they haven't been tested, or you have everyone on there. And so the first sign that the boat is rocking the other way, everyone piles off at the same time. And so you have, what used to be a bunch of demand for the stock now all becomes supply for the stock as everyone unwinds. And that's that structure flipping.
Yeah, because that's a big move right there. Look how long it took to do that move.
Yeah.
And then look what it did in one day.
Yeah, exactly. And that's why mean reversion trades can be a really powerful thing, because it's like the old saying, it takes the stairs up and the elevator down. And it's for that exact same reason. It takes a long time for a trend to develop, for it to accumulate buyers, and for it to actually go and get overextended. But then all it takes is something to set it off. And if, it's really like a snowball, where if one layer of demand falls off and it becomes supply, then it can just snowball and everyone gets shaken out, and then it can actually, overflush. So usually when these happen, I'm looking for key levels that this could potentially flush into, and that can be a great trade for either, if someone's a short seller, they could capitalize on that. Or if someone is an options trader like myself, I would usually be looking for puts on a trade like this.
So how would you use the key levels in this instance for someone moving forward and they watch this video, that way they see something like this in the future they can execute?
Sure. So there's a couple of ways. One of them is just to always have key levels on a chart as it's building. And so one of the nice things about trends that take a long time is they show those key levels along the way. When it does have those subtle dips, where's it always soaking? And so you can see, I look at touch points on the screen. So where does it touch a lot? And you can see levels down here, There's, touch points here, touch points here. And so you're looking at those big key areas, touch points up here. And so marking those areas with lines as a trend is forming can help you when it eventually unwinds, to help with range anticipation, to know where you should either cover or take profits if you're doing stuff with options. And so, for instance, this is a massive key level here. You can see touch points up here, touch points down here. So just a lot of reactions are happening in that area. And you can see as someone is doing a mean reversion trade and it's flushing down, those tend to be the major areas. And you've probably heard this on X or something like that. So when stocks go parabolic or things, and they have that first big mean reversion trade, you'll always hear people say it's just back to prices from last week. And that's actually a statistical thing, where a lot of times as trends speed up and they mean revert, it usually goes back about 1 week to a couple of weeks of price action. And that tends to be anywhere from 10 to 20% or however much it ran. So those are just a couple of ways to kind of think about that structure and how to potentially play it.
And yeah, and you're using the same type of idea when it comes to, it looks like in this case you were showing where it could potentially go to,
Yes.
right? Are you using that same type of idea when it comes to executing the trade to get in to begin with, or are you more so waiting for that catalyst, like Trump said something, and therefore you found the catalyst to make it drive down?
Sure.
Like,
So the key levels, so something like this, that is more of like a profit taking zone.
Yep.
So that's like range anticipation into a major area where
Right.
that would be tough to, break through that, especially on one day. But you would definitely draw, key areas as it's forming throughout the day. So I have a more zoomed out view, but if you were to go into the intraday, you can definitely have levels there as well. So again, if someone wanted to take a trade on this, let's say it was either with short or, short selling or
Yep.
with puts, you would want to have the major areas at least mapped out or in mind during that day. And so that could be like the high of day, what is like the low of day, what's like that support there, that opening range, where's VWAP at? And then you're basically just waiting for something to start to act weak. And then if you have a catalyst, a lot of times it's about recognizing the catalyst, the potential of it, the range anticipation, and then just finding some level to work off of. And you can kind of, based on where the price was at when the news dropped, you can use multiple points. So it could be high of day as a stop. It could be VWAP if it flushed under there and it's retesting. But you just want some kind of significant area that you can use as some kind of gauge that's saying this stock is staying weak when it touches it, and I have my risk set up somewhere above there.
I know people are going to be watching this and they're like, okay, he said overextended a couple of times. Like, what does that mean to him? Like, what does that mean?
So you're right. Overextended is a subjective term, and it can happen on intraday basis. It can happen on a multi-day basis.
Right.
And so overextension is usually characterized by a trend that has been in place that starts to change characteristic and starts to speed up. And so that can be in percentage terms. It can also be, it's always in dollar terms, but a lot of times it's in percentage terms too. So, recognizing when something like Palantir has been, in a channel, a steady grind up, and then it starts to, have that gap up after earnings, and then it just starts to nonstop rally. And so when something gets overextended like that, then it becomes on my radar for mean reversion. And then I think about what's the timing. You have MOPEX week. And so this was like the week that I was looking for some kind of thing like that. Now, did I know that Trump was going to say that? Of course not. No. So, but it's understanding that this structure is vulnerable to an unwind. And if something sets it off, then that can do it. It's just like when MSTR, when that had its big mean reversion trade several months ago, what set it off was a short report. And, it's had short reports the entire, way up, like every couple of weeks or something. But it was the timing, because that was around that MOPEX cycle. And that was, just a catalyst. So it's the same thing. Overextended, options driven. You have your key levels, and then you're waiting for something to set it off. Yeah, the third Friday of every month. That is the MOPEX.
Big week for options trade, because it can happen like this is a Friday.
Yeah.
Right? It happened a couple of days before.
Yeah, and it's not always. Sometimes it could be on another week if that happens to be the highest. So like for instance, if something has like earnings, or if there's like a big quantum computing convention some week, like that can kind of supersede the MOPEX cycle. But typically the MOPEX cycle, which is just monthly options expiration, that tends to be the big options area. And so basically why that matters is that as it's running into that, if something sets it off, all the call options can unwind with that. So, the stock was at 125 and you had call options all along the chain for it, and those all become worthless almost worthless as it unwinds. And when you have a lot of those options positioning unwinding, also the people that were hedging it are also unwinding. And so when you have all those call options unwinding, then all the people that were also hedging that by buying stock also have to unwind those positions. So all those layers of demand that got stacked up along the way of the trend, it gets flipped to layers of supply now.
I have one last question, man, and I asked this just because I think this is more greedy right here. I just want to know, because like when I trade overextension plays, like I like to see more parabolic, right? Whereas this is more steady. But I miss these because like I do see these, like they're steady, and I think when they're steady, there's a lot of support everywhere that it's gonna hold. But this one just melts straight to like you said, last week's prices. So have you found that with this type of setup, is there like you don't really care about the steady price action just go into the area instead of like a parabolic
Well,
kind of move?
it can be. It depends on the nature of the stock too. Something
Okay.
that is going to be considered overextended in small cap land is going to be very different than something that's overextended with a large cap. So
Mm.
if you're having, moves that are tens of billions of dollars in market cap, that can be a form of overextension as well,
That's a good point.
in addition to just the chart shape and the slope of it.
Cool. Thank you for answering that, man. I appreciate it. Everyone, you need to write that note down because that was a great answer. So, look, if anyone has any questions, which I'm sure people are going to have, where can they learn more about you, man?
Yeah, so I am a moderator at Investors Underground, so you can always trade with me there. Just go to investorsunderground.com. And then I'm on X as well as Chris_J_Lance.
Perfect. Y'all heard it, everybody. Thanks, Chris.
Thank you.
Thanks, brother. Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.